Hi everyone. So today we're doing our webinar of budgeting like a boss. And my name is Joanne McCauley. I'm the owner of Jigsaw Tax and Advisory. I'm also the podcast host of The Accidental Bookkeeper. So you may be coming to us because you have listened to our podcast, and hopefully I can help you a little bit. So why are we going to be talking about budgeting today? Um, in my mind, budgeting is essential if you're a small business owner or even just in life, to be honest. We have this little saying here, budgeting is telling you your money where to go instead of wondering where it went, by David Ramsey, or Dave Ramsey. To me, as a business owner, we spend a lot of time looking at in the past to see what we've done. And we wonder what's going to happen in the future, but do we really give ourselves a roadmap to follow? So today, that's the topic that we're going to be talking about. So what are we talking about today? We're going to talk about why you need a budget, where to start, how you estimate your revenue, how to understand costs of sales and profit margins, operating expenses, balance sheets, cash flow items, why these things can be all important in your budgeting, personal budgeting, and then how we can help. So let's jump into it, shall we? So often people come to me and ask about getting a budget done. Usually it's to do with maybe borrowing some money and the bankers ask for a cash flow budget or just a general budget to have been prepared. And I know, like you, I think, oh my God, here we go. How do we even start this? Where do we tackle it? It can be a very overwhelming thing to do to create a budget. But this saying by Martin Luther King Jr. kind of, in my mind, is how I approach a budget. You don't have to see the whole staircase, just take the first step. So if you're taking the first step, it means let's start looking at our budget. Let's just do it one bit at a time to try and go, all right, I'm going to create this big budget. It's going to take me hours. It's going to do this, this, and this. It can be very overwhelming. So what I'm going to do is show you how I would go about doing a budget. And hopefully you can get a couple of ideas out of that for your own budgeting purposes. You may not want to do the whole lot of it. You might sort of think, oh my gosh, that does seem a little bit overwhelming, and we may be able to help you with this. But this is how I approach it. So hopefully you can get something out of it. So why do I need a budget? So, why do you need a budget? Well, the reasons I think people need a budget are, first of all, it maps out the path ahead with some clarity on your future financial position. Um, it's exactly that. It's just like a roadmap. We're working out where we're going to go and how we're going to get there. And hopefully that will provide us with some clarity on how to do that. I see a lot of businesses who literally just run their business day to day. They never really look at what their budget is or where it's going to go. And often they come to me at the end of the year and get their tax done, and they're sometimes a little surprised at the results. Sometimes they're happy with it. Often they don't have the money set aside to pay for the tax bill that they didn't realize they were going to have. So it is really important that you have a little bit of clarity on where you're going with your business. It also gives you something to work toward. And, as business owners, we're always trying to strive to be better than the year before and do better in our work. So it does give us something to work towards. For example, with my team, I usually set a budget for each month of how much turnover I would like to achieve. I don't go through every nitty-gritty figure, but I do go through those turnover figures. And the whole team then works towards achieving that turnover. And so maybe that's something you would like to share with your team as well, and it gives you and your team something to work towards. It's a great tool for decision making. So when it comes to decision making, we often don't really know how to incorporate what plans we have for the business into what the future is going to look like. So it could be that you're looking to hire another person. Can we afford to do that? What's the impact going to be by hiring that person? Or it might be that you're going to make a decision about buying a piece of equipment. Might be a new car, it might be a new piece of equipment. How's that going to impact my daily cash flow? How's that going to impact my profit, all that sort of stuff. So it can be a really good tool if you've already got that budget in place to then slot in some of these decision-making things that you might have to do. It might also help you to identify areas of savings or new opportunities. And definitely, when you do go through the process of doing a budget, we find often people come up with things they didn't even realize they were paying for, or maybe they're paying at too high a level for that. So, having a good understanding of what you've actually spent last year might identify areas of savings, but it also may make you start thinking about things that you could be doing slightly differently, on new opportunities that will help you to achieve those things. And also, finally, this is what most successful business owners do. I don't imagine that any particularly big companies run without a budget. They would definitely have a budget set. So, why don't you start to think like those bigger businesses and act like a big business and have a budget? And also, I do find that smaller businesses that do have a budget usually have a lot more success and a lot more understanding of where their business is going and where it has been. So, where do I start? So, when I start a budget, I always do start by looking at the figures of the prior year. It's always a good way to inform us of what is going to happen, because we can look at what happened last year. It's also really good idea to have a look at what kind of expenses you have. So to do this, you need to have your accounts up to date. So there's very little point doing this if you haven't actually spent the time to get your prior year accounts up to date. Given that we're currently sitting in July, this is a really good opportunity to have a look at this now. Now, for me, I find the best results with budgeting is to look at it on a monthly basis. You could look at it on a weekly basis if you really wanted to, but that can be a little bit difficult. You can also look at it on an annual basis, but again, there's so much scope within that. So a month by month basis is a really good way to do it. So what I'm going to show you is the spreadsheet that I would download from Xero, which is what I tend to use. Now, if you're using MYOB or QBO, there would be similar spreadsheets available. The reason I'm going to show you in Xero is because Xero gives us a demo company, which allows us to use non-real data to have a look at this. MYOB doesn't give me that. So if I was to do an MYOB demonstration on this, I would have to go in and make some data up into a company. So I'm just going to show you from Xero, but there is the opportunity to do the same sort of spreadsheet in MYOB. So I will show you how that works. I'm just going to stop sharing for a moment so I can share a different screen. Okay, so now I'm sharing the Xero screen. This is the demo company. And what I would be doing to start a budget for myself or for any other business that's using Xero is first of all making sure that everything's up to date for the previous year. I'm not going to go through that, but obviously you'd go through and make sure that all your bank accounts are as reconciled as they can be. It doesn't have to be perfect, but we don't want to miss out on some major income or expenses if you have a whole lot of unreconciled transactions. Then what I do is I go up here to accounting and I go to profit and loss and I start with that. And I want to start with the previous month because we're in July. Now, you might have to, if you're doing this after July, the previous month will be July or August or some other time. You can use a custom date range if you do need to find that. But I would go to be able to do this, I'm going to go to last month, which was June. And then I'm going to do a comparison with the previous 11 months. I'm also going to go over here and do a total so I can get all of those added together, and then I am going to update and run that. Now, because this is just test data and it's not got all the information in it, it doesn't have a lot of these fields filled in. But if you were doing this on your data, it will have all of the different items for the month or for the previous year of months, and it will have the total for the financial year. I would then go and export this into an Excel spreadsheet, and we would work from there. Now, in the interest of using real data or something a little bit realer than this, I have actually prepared an Excel spreadsheet earlier. So I'm now going to stop sharing and share with you that Excel spreadsheet. Okay, so this is the spreadsheet that I had prepared previously based on some data that, would have been, I've sort of manipulated a little bit of a company that I have something to do with and made a few figures up just to give you a bit of an idea of what might be downloaded. Now, the advantage of having a Xero is that a lot of the time the formulas are filled in for you. If you are doing this in MYOB or potentially QBO, just make sure all the formulas are there. So we want to make sure that this, for example, is a sum of the sales, not just a figure that has pre-populated. And some of this stuff won't necessarily like have a formula in it, but probably just check where you're up to with everything. So what this is giving me is a idea of the profit and loss from the previous year. It's showing that last year we made $20,000 in profit, and it's giving me all the different bits and pieces to it. What I would normally do if this was me is I would save this as my budget spreadsheet, and then I would copy this, Mavel copy. I would create a copy at the end, and I would then call this budget. And this is the this is what I am going to use to create my budget. You might want to go and change these dates so that we're looking at the next year, just so that we're not getting ourselves confused. And then we're ready to go. Let me share back to our PowerPoint. Okay, so we've started by downloading our spreadsheet. Now, the next thing to do is to start thinking about your budget. And one of the things I like to do is determine the best place to start based on your situation. Because remember, everyone's situation is different. So the types of places you could start, and you might want to find something completely different, but these are the three that I would generally look at. The first one is, do we start at our top level sales? And for me, that's where I usually start. And in this example, I am going to talk about top level sales to start with. Usually you've got a bit of information from the previous couple of years that you can work out, what is actually likely to be my sales, what do I need to increase them. But for some people, they might want to actually start with their costs. And this is particularly the case if you're a new business and you're not really sure what your sales are going to be. So let's say you're thinking about starting a business, and you do have to do a budget for it. Let's start with your costs. Let's start with your fixed costs. What are our fixed costs? They're going to be the things that like rent, or there might be wages that you have to pay, and then start to bring in your variable costs as well. And then once we've done that, we can then start to look at, well, what kind of sales do we need to cover the costs that we have? And then the other place that you might want to start for some businesses, actually to start with your personal budget to work out how much you need to live comfortably. And let's face it, we go into business not for the hell of it. We go in it to make money and to hopefully create a lifestyle that is suitable for what we're doing. And so you need to look at how much you do need to live and live off, and how will that impact those other items, including the costs and then the sales. So it's kind of working backwards. So have a think about it. But for the sake of this example, we are going to start with the top level sales. So how do I estimate my sales? Okay, so there's a few different ways to estimate it. And again, it will be based on your situation. So the first thing I would look at is historical data. Not only will this help us to determine what happened in the past, but it also might help us to determine things like seasonality and consistency. So if you have a business that is seasonal, you need to account for that. As an example, we know, and we'll have a look at this in our spreadsheet as well, typically January, is a fairly low month. Probably for a lot of businesses, in all honesty, you might close down for a few weeks in January. You might also just find that people aren't necessarily buying your product in January. It might be your busiest time of year as well. So have a think about when you see seasonality in your business. The next thing I would consider is capacity. And I guess that's kind of looking at how much realistically I can sell based on time, productivity, or output constraints. Now, as accountants, we charge for our time. And so I have staff and they can only work a certain number of hours. So if I actually want to do my budget to see what my capacity is, I would then look at my team. Who have I got in my team? What's their charge rate? What sort of hours are they working? And then what sort of productivity am I expecting out of those hours? Because it's unrealistic to say that I'm going to be charging my team out 100% of the time. I have a level of productivity that I would expect from my team. So I can use that to work out what my capacity is. That might be the case for your business. You might also then want to go, if I want more, how do I afford that? I need to hire another person. Your business might not have a capacity issue. So have a think about that. Existing contracts. So if you have existing contracts in place, that's always a good place to start as well. So you might want to take into account that you know that every month you're going to have this much money coming in straight away from those existing contracts. And then what else can I use to supplement that? We can segment your revenue by product, service, or region. And again, another way to think about how are my sales being generated? Like, where is it coming from? What am I selling? So if that's relevant to your business, have a look at that. And maybe you can tweak that a bit too. You know, you might find that you're selling a lot in one product that's not making you a lot of money. Maybe if you were to sell more in a different product, that would give you a better outcome in the long run. You also should need to evaluate the market conditions. So, what are the industry trends? What are your competitors doing? And what is the economic outlook? And how is that going to impact your business? They're questions that you need to ask, but they are definitely things that you need to be factoring in. And then also factor in changes that you might be making, including things like a price rise, a new offering, or some sort of promotion. So if you're offering some sort of promotion, you would expect to see that your sales are increasing as a result of that. So all of those things need to be considered when you look at your sales. So we're just going to go and have a quick look again at our spreadsheet to see how that's looking and what things we could think about with regard to our sales. Sorry, give me 1 second. Okay, so here in our spreadsheet, we've got our sales up the top here. We've had a look, and this is what we did last year. But you can see there's a little bit of a dip here. So January is definitely lower. So is July a little bit. For some reason, our sales in these months seem to be a lot higher. So it's a case of going through and thinking about what are those things that need to be tweaked or whatever. You might want to put some formulas in here and make these an increase. So you might decide that you want to do a 5% increase. Now, I know not everyone's great at Excel here, but you could go in and put in a formula such as that. Sorry, helps if I'm doing this properly, is equal to last year's number times 1.05%, which is going to give us a 5% increase. If I do that in June, I can then pull that across for the rest of the year. And that's going to give me my 5% increase on last year in my budget. Again, have a think about it. If you know how to use Excel, you might be able to break those into different line items and play around with it. They're all the things that you're going to think about. Let's go back to the PowerPoint. Okay. So now we're going to consider our cost of goods sold. And again, this is not always relevant for every business. Not everyone does have a cost of goods sold, but understanding what your cost of goods sold is important if you're a business owner and you are selling product that has cost of goods sold or cost of sales involved in it. So when we talk about cost of goods sold, what we're talking about are the direct costs involved in producing the goods or services that you sell. There could be things such as obviously the inventory. So if you're a shop, you're buying the stock and you're selling it, your stock is your cost of goods sold. But if you're making stuff, you're using materials to produce something, That's again what your cost of goods sold is. It could also include packaging, freight and delivery, and direct labor if that's applicable. Now, as an accountant, when I'm looking at my cost of goods sold, I am looking at my labor because what we sell is our time. So have a think about your own situation. What is your cost of goods sold? Now, those things you would imagine are going to change with regard to what you're selling and how much you're selling. If you sell nothing, your cost of goods sold should be nothing, but that's not always the case. But so keeping a track of your cost of goods sold is really important. The difference between your cost of goods sold and your sales is what's called your gross profit. And so knowing your gross profit is really important, because if you don't have a gross profit, you can't have an overall profit, because then we need to take off the overheads and operating expenses. The other thing to understand is your gross profit margin, or your profit margin, which is the difference between your gross profit, or the percentage of your gross profit on your sales. So I'm just going to show you this again on the spreadsheet to explain it hopefully a little easier for you. So when I do a budget, I do put this line in here, which is my gross profit margin. And essentially what it is showing me is the sales less the cost of goods sold, which I haven't adjusted, but if you're doing a budget, you need to think about what is that? How are they going to be adjusted? What am I looking at? If I'm selling 5% more, is it going to cost me 5% more to get those goods? Things you have to think about. And then on the flip side of that, we have our gross profit, which is that figure minus that figure. And then there is a percentage. The percentage is my gross profit divided by my total sales. This is interesting because you should be keeping this relatively consistent, and you should know what your gross profit should be. So I suggest, if you're not sure how to do this, you can actually add this in as a line item into your zero gross profit and loss. If you need some help with that, ask me. I can certainly help you with that. But it's really good to understand and monitor whether your gross profit is changing. Okay, so the next slide we're going to talk about are the operating expenses, which are the other expenses that can be involved in your business. Of course, everyone has expenses in their business. And I guess it's a case of realistically, what I do if I'm doing a budget is I literally go through every single line item and have a think about each one of them. I do also want to categorize them as to whether they're fixed costs, variable costs, discretionary expenses, or contingency expenses. So let's just go through each one of those one at a time. So a fixed expense is something that's pretty much going to be the same all the time. And some of these items could be fixed or variable, so just be aware of that. But a classic fixed expense is rent. It's very unlikely that your rent's going to change over time. We know it's going to be the same amount every month. A variable expense, though, might change over time. And they could be things such as electricity could be a bit variable, in all honesty, with the current climate where we have electricity being more expensive sometimes. Also, I live in Goulburn at the moment. My bill is going to be a lot higher in winter than it is in spring and autumn when we're not using the air conditioners as much. So it can be variable. If we didn't open the doors, there would be no electricity expense because we wouldn't have anything turned on. But also variable expenses could be things like advertising. It could also be staff wages. If our staff, we have a workforce that is, a little bit of a combination of a casual labour force or something like that. Discretionary expenses are expenses that we choose to spend, and they might not be necessary 100% to our business, but they might help us or might be something that we choose to do. An example for me for a discretionary expense is potentially training. So with regard to professional development, I do have to do professional development. There are various ways I can do that. The discretionary expense might be that I want to spend a little bit more on it this year and I want to travel to do that training as opposed to doing it as a webinar, which would be substantially less. And then contingency expenses are things that I always would put into a budget, a line item for something that may or may not happen. So as an example, you just don't know. You don't know what's going to be coming up. So you put a little bit of an expense line item in there for $1,000 a month for those things that we haven't thought of yet. So what I would do is literally go through my budget and look at every single one of them. And I'm not going to go into this into too much detail, but these are a couple of things that I would be considering, and I'm not going to go and override these at the moment. But bank fees, clearly it's a $10 a month fee. There is these other fees here. I'm not sure what they are, so I could go in and have a look at it. Is that something that's going to keep going? Don't know. Just looking at this, for example, the debt collection fees, I can see that we're paying $63.03 a month, but previously we we're paying $54.81 a month. Clearly the price has gone up. So I want to just override those older fees with the newer ones. And I also want to make sure that these are actually transposing over here. I can see that this is a fixed number, so I need to actually make sure that I have the sum in there. So I'm going to sum that. I'm then going to copy that down so that my formulas are correct. And then that all will go forward. So again, go through every single line item and think about it. What is it? Look into it in your program from last year. What happened there? Rent is another one. The rent's clearly gone up from the previous year. It's not going to go down in the earlier months like it did. Let's just pull that through so that we've got our higher rent in there. When it comes to wages and salaries, I actually like to go in and add or put in the line item for each of my staff, so I can actually see what each staff member is earning. And then I can start to play with it and think, well, if I got another staff member, how much is that going to cost me? I also want to make sure that my superannuation is correctly calculating based on the formula. I've put this in earlier, but the formula should be 12% because we now have a new rate for our superannuation. So just make sure that everything kind of makes sense. Essentially, that's what you do. Just keep going through every line item and have a think about it. I would also then add in here a line, and I'm going to call it general or contingency, and maybe put in $1,000 so that we just have that contingency in here. And then make sure that copies down. So essentially, that's a budget for us, right? We're just going to go through everything and think about it and work out what we need to put in there. And based on this budget, which is not very real, we're looking at a $22,000 profit at the end of the year. Okay, now the budget that we just prepared is a P&L budget, but we also need to be mindful of cash flow, and cash flow can be very different to the profit and loss. So when we do a budget, personally, when I do a budget, I use a different program. I don't necessarily do it off a spreadsheet. And in that program that I use, it does also then give me an idea of the cash flow. And the reason that the cash flow is different to the profit and loss is because we have balance sheet items and we need to understand the impact of those. Remember, cash flow can make or break a business. A business could be very profitable, but it has very bad cash flow, and that would potentially put that business at risk of continuing. So why is the balance sheet important, and what are the impacts of that? So here are a couple of examples. So the first thing is our debtors or our accounts receivable. So if our customers are delaying payments, that will make our cash flow suffer. So we need to take into account how long it is taking for that money to come in, or if it's even being paid at all. So it's really important to understand the impact. If you're going to sell a lot of stuff in July because that's your peak period, and then you're going to get a whole lot of money paid for in August and September, how are we going to fund for those 2 months before we actually get that money in for whatever reason? Creditors is the same, but it's the opposite. So creditors is, or accounts payable is when we pay suppliers. And sometimes you could be like me, where you get an invoice and you just pay it straight away. Or maybe you're actually looking at what date that's due and paying that on the due date. Paying suppliers too quickly can drain our cash, even though it might also improve the relationship with our suppliers. So just being aware of those sorts of impacts and how they would impact the cash flow, which is different to the profit. Now, those two things just require good management, but the next bit are things that you're not going to necessarily see from your profit and loss, and that is loan repayment. So if you've got loans, you will actually have to pay those. They will reduce your your balance sheet item of the loan. And there is a P&L impact because there's usually interest on those loans, but the interest is going to be a smaller component of the actual cash flow. So you're not actually putting that in. So if you're going to do a cash flow budget, you kind of take a P&L budget and then you start to think about these other things that are coming out of your business account that are not going to necessarily be in that cash flow. Loan repayments is a very big one that we often see people get into trouble with because they're seeing that they're making a profit, but those loan repayments are just way too much to actually take into account that profit. Asset purchases. So if you're buying a piece of equipment or buying a vehicle or something like that, that's going to reduce the cash, but it will be sitting on your balance sheet, not necessarily in your profit and loss. So if you're going to do something like that, you need to factor that in. Now, stock or inventory, usually when we're looking at our cost of goods sold, we're actually hopefully looking at it by the amount that has actually been sold. So when we're doing these cost of goods sold, depending on our system, we sometimes aren't really looking at what the cash flow is relating to that. So if we're buying a lot of stock and it's not being sold, there's a lot of money tied up in that. So you might need a bit of help in managing your inventory. Drawings and other or owner withdrawals. Again, these are things that are often on the balance sheet where we take money out of the business for our own personal use, which reduces the cash but isn't any expense to the business, and that can have a significant impact on the cash flow. And of course, GST and income tax affect the cash, but they don't affect the profit. Now, when we looked at our P&L before, we were looking at that net of GST, but clearly there's a GST impact as well, and we haven't taken into account the income tax, so we need to start thinking about that as well. So let's talk about our personal budget, because in that last one I just talked about people having personal drawings, and that can be a major impact on a business if we're drawing too much out. So in most cases, your business income is what sustains your personal budget, and it's important to look at these two separately and not mix the two. When you use business money to maintain a lifestyle that you cannot afford, it's a recipe for disaster, and this is something that we see time and time again. We see people who are sole traders, particularly, who just use their bank account for their business as their normal bank account for everything else that they do, whether that's entertainment, food, rent, whatever. And if that money that they're using is more than the business is making, it will impact the cash flow of the business and make it impossible to pay some of those bills that are going to come up in the future. But I also think knowing how much you need for a personal budget, whether your business feels like it is able to sustain it or not, it will actually inform you the wages or drawings that you require and ultimately those top line of sales that you need to achieve. So it's really important to go in and do that personal budget. So how do I do a personal budget? And again, I would start with historical data, but this time I'm actually going to look at expenses rather than income in the first instance. And what I would do if it was me, which is what I do, is I actually go into my bank accounts for my personal bank account, assuming that I am keeping my business money separate from my personal money. And I always suggest, even regardless of what your structure is, if you are a sole trader, you should be withdrawing the money from the business at a set amount and putting it into a separate account, which is your spending. So you are keeping your private spending separate. If you are trading through a company or a trust, you should be drawing wages and treating it that way as well. So what I would do is go into my personal bank account and download what's called a CSV file, so a .csv file, which is essentially a spreadsheet. If you're not sure how to do it, Google it within your banking platform. They all have the ability for you to download a CSV file or an Excel spreadsheet. And then you start to use that data and sort that data to see what you've actually spent in the previous year. I would go through it a year so that you really get a good pattern of what you're spending. And I would actually take the time to categorize each item into what it is. It's a bit laborious, and there are ways, if you're good at Excel, to do this a little bit quicker. And again, we can help you with this if you would like, but actually taking the time to see what you spent last year can be very eye-opening. Again, as I've said here, I would always start with the expenses, not the income, because it's probably the expenses that we're talking about more so than income. And I would always also usually start with the fixed costs and then move to variable costs. And when I'm doing a budget, I kind of look through, all right, here's what we did last year. Now let's have a think what I need to do this year. So what are the fixed costs? The fixed costs are the things that you know you're going to have to pay, and they're going to be pretty similar every time. And don't forget, some of these could also be variable. So fixed costs could be things like rent or mortgage payments, childcare, insurances. So you might have a monthly insurance bill that comes out. Food, now food is fixed and variable. There's going to be an amount that you're going to have, like you've got to eat. So there's got to have to be an amount that you are going to put aside for food, but you might also have a variable budget for entertainment or, when people come over for dinner or something like that. So you might set aside a couple of $100s a week to buy food and then have a special budget for your variable side of that. Other loan repayments, so you might have a car loan or something like that, or credit cards that need to be paid. Medical, again, that could be fixed and variable, but medical, often you might have medications that you have to pay for, or certain appointments that you have to attend on a regular basis that you know they're kind of a fixed cost. Transport, that could include public transport if you're traveling to work every day, or it could include your car. Children's activities, which tend to be, relatively fixed, but again, there could be a variable component. And subscriptions, which could include things like telephone bills, it could include Netflix, Stan, all that sort of stuff. So have a think about what you're spending and what's kind of fixed, and stick that into your budget so you know what you have to cover at the very minimum. The next thing we should be looking at is our variable costs. And like I said, some things are fixed and variable at the same time, but we do work to live, hopefully not live to work. So hopefully we can factor some good stuff into our budget as well. This could include things like holidays, entertainment, lifestyle, clothing. Again, I know clothing could be fixed and variable. We do still need to wear clothes, but what are we spending on clothing? Do we have a budget that we can work to, and do we have the nice to have kind of budget? So have a think about that. Okay, so we've gone through and we've looked at our business budget, we've looked at our personal budget. How does it all come together? It's all nice to look at it, but the most important thing is to also be accountable to what we've set. So now that you have a budget, you also need to monitor it. You need to review it regularly. You need to check that you're on track, and you need to adjust where you need to. But once you've actually set it up, it makes it so much easier going forward to do those tweaks and to do that monitoring. You also can use your budget to consider new ideas and determine the impact of those ideas, which was something I said at the beginning. It's really good to use your budget to actually think about how these new ideas you have is going to impact that overall budget. Okay, so how we can help. At Jigsaw, we can definitely help you with budgets. That's one of the things we do. And we do run a budget workshop for businesses. Now, it is probably about a couple of hours, probably like a 4-hour session. Why it's a workshop is because a budget needs your input. I can't just do a budget for you. I need you to think about what you're spending and your input into this. So yes, I could prepare your budget, but it doesn't mean anything unless you're actually the one who's looking at it. So the $2,500 plus GST will give you the budget. We'll have done a workshop. You'll have a budget at the end of it, and you can go back and start working off that budget, but it has your input. Same with the personal budget. We do charge a little bit less because there's a little bit less involved. So we'll charge $1,500 plus GST to help you with your personal budget. And then we also will offer you the quarterly accountability, which is $1,200 plus GST. We'll give you 3 quarterly catch-ups to go through and see how your budget's going, work out if there's anything that we need to tweak on that. Now, all of these can be packaged in, and we can actually charge these over a monthly basis to make your cash flow a little bit better, even though we may have already done the budget for you. So hopefully that's helped you understand how to create a budget. And if you do have any questions, please feel free to send questions to Jigsaw Tax. Thank you so much for listening.